Hi, welcome to the market alert for Thursday the 15th of October 2015, and starting off in the daily chart, there's a reason for this. In Monday's and Tuesday's market alert, I spoke about the levitation that this market was actually showing. Low volume, prices moving higher, prices being marked up, and we're due for a move to the downside, some sort of selling coming into the market, and also some profit taking by the professionals as the market's been moving up. We've seen this over the last couple of days. We've had 2 days of this, and what's very interesting here is that we don't actually have any red bars, and red bars indicate selling by the professionals, so there's no selling either, but the market has actually moved lower. So we can see on the overnight market, prices are starting to move back towards the upside. So whatever weakness was around, looks as if it's been removed. So this is the background of the market, and it's very important that you look at the background of the market. When you're looking at 5-minute bars, they don't mean a lot in and of themselves, but as soon as you stand back and have a look, you can see we've got a market that's going up on low volume, and we've had a couple of days where the market's given back some of these profits moves, or profit taking has taken place by a few in the market. So again, just to reiterate, it's important that you actually look at the background of the market. So that being the case, and as I warned in Monday and Tuesday's alerts, that we're due for the volatility to return, and also a move to the downside. And this is what we saw yesterday. The market opened at the 17,050 psychological level. The market moved higher and traded up to the 17,100 level, and when it reached this point, the market really struggled with the resistance at this level. And there are a few clues here when a market is really struggling. We've got the backdrop where the market's moved higher on low volume, so we're due for some profit taking 7 days straight to the upside, 1,000 points. Law of averages says that we're going to see some sort of profit taking. And here we have the market banging its head against this 17,100 level. We then get, if you're long on this one, if you're a buyer of this one and the market's doing this, then there is a bit of a problem going to be coming into the market. So we can see the market struggling at this level. There's warning bells there, and a case of taking the money off the table, because again, what's in the background of the market there. The market then puts in a potential sell because of the weakness and also failing to close above the 17,100. Prices then move lower and trade back down to the 17,050 level. And I received a couple of emails about this yesterday because the market obviously continued lower, and the emails were basically along the lines that I took the money at this level and then the prices continued lower. What could I have done to have actually stayed in, to have actually made more money? Well, first thing is the background again of the market. The market was due for some profit taking to come into the market. The downside was certainly a better choice than the upside, and again, 7 days up, law of averages says that the market's likely to move lower. Also, the economic news that came out yesterday was weaker than expected, so that adds more into the mix as well, and improves the odds that the market's likely to move lower also. So what could you have done at this stage? And I understand exactly why I received the emails, because the market had traded down to this support, and we can see at the 17,050 over to the left that the market had found support in the pre-market session. You can see it all the way along there. So a major support area, and that's why you see the blue test bar there. So prices were brought back by the pros to try and hold this level. So what could you have done in order to actually stay with the trade in the hope that the market would move lower? Well, the first thing is we've got this resistance at 17,100 where the market's been struggling to move higher, and again, just to keep labouring the point, 7 days up. So this area of resistance is a major area of resistance for the market. Even though the market's dropped down, to actually get back through this area is going to take a lot more buying than normal to actually drive through. So what you could do is this: you've got the profit from the first trade, and the market then moves down and then offers another 22, 23 points around this level. So if you're prepared to give up that, and what I mean by that is that you move the stop to break even. So you keep the stop at the break even area just to see how the market's going to react at this level. And then once the market breaks, you can then start moving the stop down as per the manual. So from the markup area, you can either use the 50% or the 100%. And what I tend to do is the market moves lower first is give it more chance to breathe. So you can see the market's broke through there. This takes us back to where we were before with the psychological level. This one will take us to the same sort of area because of the range of the bar being wider. But then we reach this psychological level, and by the time we get to this point, if I just get the measurement tool, we go from there down to there. You can see we've got 84 points on the table, and plus the 20 points there. That's a 100-point day, which is a very good day for the market that's just returning, or where the volatility is just returning to the market. 100 points in the first part of the session, excellent. And then the market stops and we head towards the quiet time there. So of course there's more in the market. It did actually trade close to the 16,000, sorry, the 16,950 level, but then found support and started to come back. But again, notice it took 5, 10, 15, 20, 25 minutes before the market actually broke down through this level again, and the volume was starting to drop off. So just to recap, when the market, again, check the background, look at the market, you can move the stop to break even, which of course allows you to remove the scalp, and then as the market breaks through, you can then use the next profit target as the time to actually exit. Or again, you can use the extensions. So for example, let me just remove this and go back. You've got 100% there, the market drops through, and then you can see as it comes back down again, you can take those other few points off the table if you want. But most of the time the market will find support at the psychological levels and resistance, as you've seen, and that's why they're a very good place to actually consider taking the profits off the table. In today's news, what have we got? US all the way today, and 3 p.m. we've got the Philly Fed Manufacturing Index. This is forecast to be slightly better than the previous, -6, -1.8, so that should give the market a bit of a lift if that is the case. And they're wheeling Dudley out at 3:30, which is a bit of a pain, frankly. Dudley is one of Yellen's right-hand men, and this is a difficult one because it's classed as a medium impact there, but depending on what he says could actually move the market. So if you've had profits within the first hour, I would be inclined to stand aside or use a decent size stop, as we've just seen there, to allow. It's a difficult one to call this because they don't normally speak at 3:30 p.m. So I don't know why they've started to do this. It's normally later on in the quieter period, in the grey shaded area when they speak, or later on in the evening, but for some reason they're wheeling him out to speak at 3:30 p.m. there. So if you've got profits on a trade, it may be wise to take it. The one thing I can say is that generally when they speak, it moves the market to the upside. So if you're in a buy trade at the time, then it's likely to boost it, and if you're a seller of the market, then it's likely to come back against it, because they're doing their damnedest to keep this market an illusion alive that everything is fine and the economy is fine and they're going to be able to raise rates, which I'm telling you now, they will never raise rates, because it will have a massive impact on the bond market, which is in another major bubble along with the stock market. So just a word of caution there. It's a very difficult one. Never seen that before. I don't know why they are allowing him to speak at that time, unless, you know, I sound like a conspiracy theorist, but it just seems a very odd time to send him out an hour after the market's open to actually speak. So it's probably to boost the market, I would suspect. So that's the case there. And what else have we got? Nothing else there. Crude inventories. So that's the news. And I've just realised I've omitted to talk about the evening session there. Last night the market moving lower, another 100 points. Now what's different about this one compared to when the market moved to here is you've got all that support to the left in this one. Once the market breaks this, it's free to move lower, and also you've got the red bar breaking through, and this is what I've spoken about before. When a market breaks through on increased selling, then it allows you to continue to hold the trade. And again, you can see the market failing to come back to break even there, and then moving down to the next level, which we just get the markup tool. You'll see from the entry price down to is 62 points there as well. So a very good day yesterday. The volatility returning, which is nice to see. And also on the overnight, the market's starting to look a bit better as well. I wouldn't touch it in the pre-market session just yet. The market moving up 100 points just needs to be a bit more volatile around this time, and it's not at the moment. Let's just have a quick look at China, see what's happening there. Market up 1.36 at the moment, so they're doing the best to keep this one moving to the upside there as well. Just one thing before I conclude, the settings for the software are exactly the same as they were in yesterday's market alert. If you want to see what they were, you can access this from the market alert in the members section of the website. Alternatively, on YouTube, if you type in Pinpoint Trader and then look up the 14th of October, you will see that the settings are in this video as well. One or two of you have said that the trades aren't marking up either, which is very odd, because I recorded the whole of yesterday's trading session and never had that actually happen. And it could be that when a trade is in progress and a second consecutive signal appears in the chart, if the first one is already marked up and prices haven't traded to the scalp target, then they will not mark up, and that's because there's a trade already in existence as well. So but we are looking at it just in case I've got that wrong. We have got the programmer having a look at that at the moment. Right, one quick look at the implied volatility, just to see what's happening there. Right, so the volatility 1496, up slightly yesterday, which you'd expect as the markets move lower for the second day, and the historic volatility coming back down to meet it as well. So there's a bit of room here yet. The blue line needs to be below the yellow line really for the market to show further increases and more momentum to the downside, but it's getting there, so that's good news to see there. Right, that's it from me. I will see you in tomorrow's edition of the Market Alert. Have a good day. And as ever, thank you for your support. It's very much appreciated. And also for watching. See you in the next one.